with academics, she has a vast experience of managing administrative activities. She has attended several national and international conferences. She has to her credit many research papers in a journal and books. She is recognized as a PhD guide, Vikram University Ujjain. She has a book published under her name, Communication Skills, by Himalaya Publications, New Delhi. She has been engaged in a corporate training also. She has contributed to developing the course structure of Higher Education Department MP under NEP 2020. So it's a great pleasure for us that Dr. Namita Soni ma'am is with us as a session chair for this track.
Thank you very much, Ankit. Thank
So,
you.
so before I start, I give you some the short guidelines to all the participants. So I'm sure that every participant follow these guidelines. So the PPT you need to be present from your side. Okay, so be ready with your PPT before the completion of the first prior candidate. The maximum time for present your presentation is 5 minutes. We give like 2 minute time to Dr. Namita Soni ma'am for any QA or any query which is asked to the candidate. Okay, the researcher. The participants should share their screen, and other participate during this presentation. Other participants should mute their mic so that no disturbance is created during the presentation. Timing is strict, so I request to all the participants when they give the presentation to give the presentation in a precise manner so that is the presentation your can be completed in a 5 minute time duration. Okay. So with us is the first participant is Dr. Dr. Deepa Joshi ma'am. Okay. The topic is corporate governance, learning and best practice through setbacks and approach through case study. So over to Deepa Joshi ma'am. Share your screen.
Thank you, sir. Good afternoon, ma'am, session chair, and good afternoon, all the present here. I'm here to give my presentation on the topic. The screen is visible. The screen is visible.
No, ma'am, not yet.
Ma'am, if any technical issue in your hand to share the PPT, so on behalf of you, I share your PPT from my side.
The screen is not visible.
No, ma'am, your screen is not visible. Can I share your PPT from my side then? Deepa ma'am, can I share
Yes, sir.
your PPT from my side if any technical issue from your end then?
Pardon,
I
sir,
have
not
your
getting.
I have your PPT.
Yeah,
So
yeah, yeah,
as
yeah.
per
You may
my
please start
screen,
with. Yeah, I'll start it from my side. You may please share.
okay.
So, sorry for the inconvenience, everyone. I'm going to give my presentation on corporate governance and ethics, an analytical approach through case study. I'm audible, now, sir?
Yes.
So first of all, let's start with the understanding of what corporate governance is. Generally, corporate governance refers to a system, set of rules, or some best practices which are required to be followed by a company and those who are running the company so that it brings out good results ethically and financially. So, corporate governance is an essential part of a bona fide functioning. When we talk of bona fide, it is related to good intentions. And conceptual framework of the people. A corporate governance framework comprises of set of rules, practices, and processes which are defined by a company. In the present times, it relates to ethics and social responsibility also. I've referred to a few literature very relevant to the topic. Uh, the present literature I'm sharing is about the School of Business, University of International Business and Economics, and it talks well on what has caused scams. If there is any overconfidence or if there is any lacuna on the side of directors or those who are authorities carrying on the activities of companies, then it will bring out something that is not acceptable and we name it as scam. So there are several things given in various literature. I have referred to. You may please refer to the full paper. I'll continue with the objectives. Uh, Objective of my study was to study the best practices of corporate governance. Again, when we talk of best practices, it relates to good governance. A company may have good governance or bad governance. Naturally, bad governance results into scams and any such things which brings out shattered confidence of people at large. And best practices gains confidence of people, the government, the stakeholders. And to study the thing after setback of scam, there have been several scams, especially during last a decade we'll talk about, but there have been several scams earlier also, which we have learned that it ultimately affects the psychology of investors. And when we talk of India, the investors have a hard-earned money because we are talking about the investors. We are not talking about institutional investors. We are not talking about those who have investment plans. We are talking about those who have small savings are interested to save, invest in share market. So their confidence depends upon good governance, corporate governance. Then methodology used, it is descriptive. Data used is secondary. It is a conceptual study and based on case study. Again, case study because we can relate to a topic with what has already happened so that we can understand what should not happen in future. So case study after the study is PNB scam, then Kingfisher, and latest is the Punjab Maharashtra Cooperative Bank. All these relate to the bad governance, somehow the overconfidence and mismanagement of funds, and lack of communication amongst those who can act as whistleblowers. The main thing which we have learned during these case study is that whistleblowers were not active. So one of the important things we need to understand is those who know about something bad is or wrong is going on, they should come forward. They are known as whistleblowers. They will act as uh, beneficiaries for the societies जो जिनके कारण हमको as investors help हो सकती है या stakeholders को help हो सकती है समझने के लिए कि what is going on in any company. Talking about the discussion part, financial scams stand as a stark reminder of the critical need for transparency, accountability, and ethical conduct. We need to talk about this only when there is something to be taken into our mind that we are responsible, we are uh, accountable to those who are investing. We are not owning anything. We are just custodians. We are
No, ma'am.
going to give something back.
Sorry,
Ji,
Deepa, ma'am,
sir?
I'm sorry to interrupt you. The time is constrained. So, can you conclude your presentation, please?
Yes, yes, sir. Yes, sir. So these were some of the recommendations and suggestions. Conclusion part, I would just like to say, in this era when we have so much of AI and machine learning, scams can be stopped actually. It is not a matter of reduction now to the level we have digitalized the banks and financial institutions and the AI and machine learning that is helping out to understand where to stop something wrong that is happening from the initial stage. So we can get the benefit of
Next.
all these latest technology, and with this help we can definitely get a good governance, and that is what I wish to express through this research paper. There is a
Great,
scope of,
Dr.
yeah,
Deepa. You did a great job.
ma'am.
Shall I talk, Ankit? Professor Ankit? Shall I talk?
Yes, yes, ma'am. Yes, ma'am.
Yes, ma'am.
Okay, Dr. Deepa, great. You did a great job. Corporate social responsibility, CSR, is definitely is a big thing. And I just wish to ask a very simple question from you. Just let me know the implications of this study that you've conducted. How this could be implied and how this could be used by the students.
By the students. Yeah, ma'am, students are
Definitely,
basically all dependent on social media. They should understand it is not just for entertainment. They can learn so much what is going on in the market and what best they can get before investing. They should understand what are things they should know as an investor. There, even on reels and social media, also RBI, SEBI guidelines, and there are several such conversations discussed by CA and several financial institutions. So, social media is not just for entertainment; it is for knowledge and gaining wisdom also. So, they can take help of
definitely,
uh, digitalization with this.
definitely. Great.
Thank you so much, Deepa ma'am. So
Thank
the
you, sir.
next participant is Ms. Yashika Muchandani, and her topic is in Imperial Analysis of Toxic Assets, Shrinking Profits in View of NPAs, Impact on Bank Profitability in reference to ICICI Bank. Over to Yashika ma'am.
First of all, very good afternoon to the respected dignitaries present here, and I am glad that I provided the opportunity to present my paper in this conference. So, being the short of time, let's move on to the paper directly.
Ma'am, your screen is not shared yet.
Okay, is it now?
Yes, now visible.
Hmm.
Yes.
Is it? So, moving on with the presentation, let's start. My topic is an empirical analysis of toxic assets, shrinking profits in view of NPS impact on bank profitability in reference to ICICI Bank. First, talking about the topic, this topic is based on the bank's asset, as the whole sector is dependent on the financial services sector, because financial service sector is the one sector which is like interlinked to all the businesses. It is the blood of all the businesses, because without it, no business would be able to survive. So, maintaining a good financial sector is very important for our economy and to maintain the growth of our economy. As you all are aware that financial institutes provides loans, insurance to the businesses, accepting deposits, and many such needs they fulfill, which they render. So, most part of their income is generated from the part of loan. That is their assets. Like the interest they earn from that is the asset. And if anyone makes a default in that asset, that is known as NPA. As per the RBI norms, any bank or financial institution which is considered as an NPA when it is unable to repay the principal or interest amount for 90 days or more because asset is ceased to be revenue from bank. Moving towards the literature review, these are the literature review I have done on my research, and there are more. Agrawal R and Ahmed and Kharchi, they all observed the comparative analysis between Indian Overseas Bank and ICICI Bank, or SBI and ICICI Bank, or Bank of Maharashtra and ICICI Bank, in which they recognized the need to have a good control on the asset quality. Moving towards the research methodology, the problem statement. So, the main problem or the core focus of this study is the measuring the impact of NP non-performing assets on profitability of ICICI Bank. And then scope of the study is this study will observe the trend of NPA, observing the profit. This study will observe the trend over of the 10 years from 2013 to 2023-24. The type of research I which I have taken is analytical type of research because it deals with the facts and figures and avoids the misinterpretation of data and leads towards the conclusion of the facts and figures. The objectives of my research are to study the impact of NPA on profitability of ICICI Bank, to observe the trend of pattern of NPA over the years in the journey of ICICI Bank, or to study the measures taken to control the NPA in the last 10 years. For example, we can say credit rating, which has been introduced because in that we check the credit score of the individual or the businesses. After that, we provide the loan. We say CIBIL check, like bank provide the check the CIBIL report of an individual. Basically, they consider the CIBIL above 600 mostly, and 900 is to be the best CIBIL. Data collection is my secondary data taken from the company's website, which is from the financial year 2013 to 14 to financial year 2023 to 24. The net NPA and the profit after tax is taken in the consideration because to avoid all the deductions and after the deduction value is provided. The hypothesis is there is no significant impact of NPA on profitability of ICICI Bank. An alternate is that there is significant impact of NPA on profitability of ICICI Bank. The analysis technique which I use is regression and correlation to study the impact of between the two variables, that is dependent and independent variable, dependent being the profit and independent being the NPA. This is the table which shows the financial year and net NPA and profit after tax. This is the data I have collected from the company's official website over the 10 years, and here is the graph shown it. So we can see the NPA is moving, first of all, rising till 2017-18, and it is then diminishing after that year. Until now, it is in the lowest. And after we see that profit, it is first of all decreasing in the value, and after that, it is a rising after 2019-20 financial year. So
Ma'am,
after this,
ma'am,
yes, sir.
can you come up with a conclusion because there's a time constraint, please?
Yes, sir. This is already the conclusion.
Sure.
This is the last slide. Slide.
Okay.
So findings which I got is the null hypothesis was rejected and it was lower than the significance level p-value. So there's inverse relationship between NPA and profitability. The higher the NPA, lower the profitability. So the bank must keep a check on customers' credibility before approving the loan. And conclusion part comes. Financial sectors we see are the most important part of the economy. So if we are not able to manage the good services by a financial service sector, then it is important that to ensure the growth of businesses and individual, the financial service sector should be well performing. And to ensure the well growth of economy, the financial services important. Thank you.
Thank you, ma'am. Namita, ma'am, if you have any QA, please ask.
Yes, Yashika, you did a great job. The best thing is that currently the banks are looking for the NPA as one of the very important factor.
Yes,
I just want to ask you a question. In your topic, there was a toxic asset mention,
yes, ma'am.
right?
Yes.
And you have not included the idea of that toxic asset in your paper. Could you just pinpoint some major ideas about the toxic assets?
Surely, ma'am. And toxic assets we see are the assets which degrowth the economy, degrowth the growth of a financial institution. Like if we consider NPA as a toxic asset, मतलब वो जो है उसकी growth को कम कर रहे हैं. NPA are the assets which make default in the payments, and they are reducing the revenue of the banks, due to which banks are not able to generate higher revenue. So that's why I termed it as
Are
toxic
all
assets.
NPAs toxic? Yes, right. Yashika,
Ma'am, according to
are
me, in my viewpoint,
no, I just want to ask you, are all NPAs toxic assets?
ma'am, in my viewpoint, all NPA might not be toxic assets, but the assets which are non-recoverable after a certain period and carrying the huge amount of capital with them are considered as toxic assets for me.
Okay, Yashika, somehow I'm not able to
As in the case of
hear you very clearly.
like Uh,
Perfect.
just a sec. Ma'am, am
Okay,
I
thank
audible
you.
right now?
Yeah, yes. Thank you, Ashika ma'am.
Mm.
So
Perfect, Yashika. That's great. You did very good. You did a great job.
Thank you, ma'am.
Great.
now over the next
Good,
presentation
good,
is
good, Yashika. You did a good paper.
Thank you for your appreciation, ma'am.
okay. So the next presentation is by the Miss Priyanka Jaiswal and Dr. N.K. Totlia. The topic is impact of mergers and acquisitions on the financial performance of Canara Bank, a long-term study. Priyanka ma'am, are you there? Your mic is mute.
Hello, am I audible, sir?
Yes, yes, you are audible. Please share your
Okay.
screen.
Yes, I'll share my screen. Good afternoon to one and all.
Yes, your screen is visible.
Is my screen visible, sir?
Yes, yes.
Okay. Um, Let me get back to the PPT. Uh, okay. So the topic that I chosen for the research is impact of mergers and acquisition on the financial performance of Canara Bank, a long-term study. So this is under the supervision of my guide, Dr. Naveen. Um, the chap the research paper outlines introduction, review of literature, rationale of the study, objectives, methodology chosen, and the data analysis, application, limitation. Uh, Start with the introduction of the paper, that is mergers and acquisitions. So financial institutions uh, use mergers and acquisition as a strategic instrument to increase their market reach and gain economies of scale and strengthen their competitive advantage. The Indian banking sector has seen a surge in mergers and acquisition in the past and is constantly undergoing mergers and acquisition in order to improve the asset quality, increase its financial stability, and along with the regulatory changes. Canara Bank, as we all know, is India's largest public sector bank and has been actively involved in such mergers and acquisitions. So when it merged with Syndicate Bank in 2020, the study that I undertake examines the long-term impact of this merger on the financial performance of Canara Bank. So the integration of banks through merger is expected to generate synergies and enhance operational efficiency. Of course, they increase the profitability, revenues, and improve the asset management. However, the extent to which uh, the impact is made is still debatable, and that's why to study this, we have a literature review wherein Jensen in the year 1986 uh, came up with a conclusion that it generates a negative result, whereas Pilloff and Sontomoro focused in the year 1919 more on what exactly mergers mean. It is so he concluded that consolidation of previously separate banks into one unified institution is called as a merger. Ramaswamy and Vagela in 2003 concluded that there is a positive change in the financial performance of following mergers. Weston and others et al. In 2004, mergers acquisition tend to improve the financial performance. Similarly, as you can see, in the others also have contributed, and the major contribution was from Khan in the year 2011, which said that he evaluated the banking performance after merger with respect to certain financial ratios like gross profit margin, net profit margin, operating profit margin, return on capital employed, debt to equity, return on equity, and concluded that mergers do lead to improved performance of banks. Huang in 2012 also concluded that mergers increase production capacity and reduce the cost of operation. Similarly, Koi, Akrofi, Sharma, and in different years did conclude that mergers and acquisition result in increased production capacity and reduced cost of operations, which lead to increased revenue. The rationale of the study is being that there was a need to see that if there is exactly an impact, and are the banks able to translate these into a tangible improvement in the financial performance, specifically related to Canara Bank. So by analyzing the key financial ratios such as profitability, efficiency, financial coverage, capital structure, and liquidity ratios before and after, because it is pre and post merger analysis, the study aims to provide a comprehensive view of the financial consequences that Canara Bank undergo after mergers and acquisitions underwent. So the study seeks to fill the gap between the existing literature just by offering evidences and insights into whether mergers exactly enhance and strengthen the financial position of a bank. With the objective to evaluate the impact of mergers and acquisition on the financial performance of Canara Bank, the study was undertaken. The research methodology, the window period, that is, yes.
Ma'am, can
Hello.
you please?
Hello.
Can you come?
Yes, sir.
Please.
So you're not audible to me clearly.
Hello. Can you
Hello.
come? Please.
Yes, sir. Hello. Hello.
Professor Payal, Professor Ankit is letting you and asking you to be a little bit like move ahead to the conclusion. He's asking you to get to the
Sure.
implications
Sure.
and conclusions.
Fine, fine. These were the hypotheses formulated with each ratios being with every hypothesis for each ratio, like profitability, efficiency, and the results were the results of the hypothesis were that the study has used one-way ANOVA because we had checked the normality through Shapiro-Wilk test, and the normality of the profitability ratios. So where the normality was detected was the data was normal. We have used ANOVA, one-way ANOVA, and where the normality was not there, we used Kruskal-Wallis test as a non-parametric test. So the result is that one-way after using one-way ANOVA, while profitability, efficiency shows that the hypothesis was rejected, null hypothesis. Whereas the financial coverage, liquidity, and capital structure, in the capital structure it was also rejected, whereas in financial coverage and liquidity, the hypothesis was accepted. So if the hypothesis was rejected, post hoc test was also applied. Moving on to the findings, the profitability ratio, where the p-value, where are the three ratios, that is the profitability, efficiency, and the capital structure ratio, showed a significant impact. The other two ratios, like financial coverage and liquidity ratios, did not. So the conclusion is,
Dr. Priyanka?
Yes.
Professor Priyanka, be a little quick in presenting, because I'm sure the convener and Professor Ankit is also looking forward, and to all the participants who are there, where please be brief, because there is a time limitations given. Please ensure that you all don't start from the strats, that is the introduction, right? You start from the methodology, because that's the most important point for the research, right?
Okay. So concluding that where out of 5 ratios, 3 ratios had a significant impact. The other two, like financial ratio and liquidity ratio, did not. So in overall, we conclude that there was a impact on Canara Bank's financial performance and financial ratio, suggesting
Perfect.
that the first objective of the merger should be very, firstly, if the banks undertake mergers and acquisitions, the objective should be very clear. Secondly, the customer, staff, and the important stakeholders should also be included in the merger process, so that positive results could be obtained. And third, the most crucial aspect is the merger should take the cultural integration into the process, because when two entities are merging, they all, of course, have different cultures. So keeping into account this, it could be mergers could be undertaken, it could be beneficial. Scope of
Okay,
further
Dr.
research.
Priyanka.
Okay.
You just can like it's good. We just want to understand a very simple thing. When we are looking at most of the mergers and acquisitions, almost
Yes.
maximum mergers and acquisitions are showing a positive picture, right?
Yes.
That they have a very positive impact. Most of the times when there is a regulatory check by the companies, the banks, when they are going for the merger and acquisition, they could be visibly see that there is a positive impact, right?
Yes. Yes.
So is
There's
this?
a positive. Yes. Yes, madam.
Please go ahead. You go ahead. You have got the question right. Please go ahead.
Yes. There's a positive impact when it comes to long term, but in short term,
Right.
if you, even if 3 years is considered, it would not give you a much enhanced report. Whereas if longer time period is taken into consideration, the mergers might result into synergies and economies of scale.
Perfect, Priyanka ma'am. Thank you very much.
Thank you. Thank you so much,
Okay,
ma'am.
thank you so much, ma'am.
Yes, ma'am.
The-
Thank you.
Ms.
Thank
Divya
you.
Sharma Shah and Dr. Neha Modi, and their topic is the rise of sustainable investing and ESG focused fund in India. Ms. Divya Sharma Shah. Okay, your screen is visible. Thank you. Ma'am, your voice is not audible. Please unmute your mic. Ma'am, please unmute your mic.
Ma'am, sir, now audible? I'm audible?
Yes, yes.
Just a second. Yeah. Hello, ma'am. Hello, sir. Good afternoon. Sir, my PPT is visible over there?
Yes, it's visible, ma'am.
Hello?
Yes, it's visible.
Sir, PPT is visible there? Yeah, okay. So good afternoon, everyone. My topic is the rise of sustainable investing in ESG focused fund in India. Before commencing, I just want to share one thing. Nowadays, investing pattern has been changed. Each and every one is an investor, right? Like a housewife is also an investor. A student who is in maybe 10th, 12th, or a graduate student is nowadays a investor. So the topic arises from that key nowadays investor trend has been changed, and each and everyone should be aware about the investment strategies. So the basic information is that first of all, I just want to convey the full form of ESG. It is environmental, social, and governance investing, which reshaping the global finances. ESG investments aim to generate financial return while promoting sustainability as well. Nowadays, when each and every sector has been growing, so the economic power is increasingly focused on ESG funds. So if we talk about the ESG funding, the globally ESG investing is no longer a niche market. We can say it is in the mainstream. So ESG has been divided in environmental, social, and the governance. the need of the studies. Growing interest in ESG, increasing awareness of environmental and social issues, and our country's role in emerging sustainable finance and investments. And the government policy is also promoting nowadays ESG practices as well. So the trends after COVID, there is a major hype in the ESG funds. There are n number of financial institutions who provide the pool of fund in ESG sectors. So I just applied the qualitative approach, which is based on the secondary data, and majorly it is from the SEBI industry reports like KPMG, PwC, and Franklin Templeton, academic literature on ESG investing. And I just found after my research on the secondary data that ESG funds, its AUM increased by 36% in 2022. ESG focused mutual funds in ETF gaining traction in India. And one more finding is that there is a strong growth in renewable energy, clean technology, and green infrastructure as well. One more thing I just noticed while doing this research, that there is a greenwashing. The term greenwashing is, this is a fake image in the environment or in the industry that we are doing we are manufacturing the eco-friendly product. But there are n number of companies who are doing the greenwashing, not the green production. And there is an investor behavior as well, a growing interest from India's educated middle class, skepticism about the long-term financial performance of ESG funds. ESG funds have demonized capital competitive returns, especially in sustainable sectors. And there are some major challenges for the ESG sectors, for the sustainable ESG investment, which one is the lack of standardized ESG data, which is the difficulty in compromising ESG performance across the company. There are no such parameters for that. Okay, this one will contain or come under the ESG sector. This is the major barrier. Greenwashing, I already discussed. Investors' skepticism, concern over the financial return on ESG. There is a kind of insecurity among the customer that did we get the return or not. And one more thing, last but not the least, it is a limited awareness, need more education on the benefit of ESG investing. So at last, I conclude that India's ESG investing is growing, driven by the regulatory framework and investors' demand. And we can say that ESG investing is about ESG investment is about making money, but also there are some key points, or we can say that aligning the profit is more important thing in that case.
Perfect.
Okay, thank you so much, ma'am.
Professor Divya, the ESG topic is genuinely a booming topic, and currently I'm also researching onto ESG. I just wish to tell you one thing, that when we are looking at the data, the companies like ENY and PwC are giving the standard set standard and even the ratings for ESG. So you can get those ratings very well. And because we have EPIC and other databases which are giving that. And other than that, I just want to know, when we are looking at these ESG sector, when the mutual fund companies are investing in which companies? I want to ask you that. When I say that my company, are you able to understand the question?
Ma'am, you want to the name of the companies which are making the pool of mutual funds?
Kinds of, yes, kinds of companies, not exactly the name, the kinds of companies.
Ma'am, Nestle is there, Coca-Cola, Nestle, but they comes under the this greenwashing companies. They make the fake references in the environment or in the
great. Yes. Even if you have done a secondary research, the topic is very relevant to the day now. So kudos to you and Dr. Modi. And one more thing is, when we are looking at the ESG sector, it is one of the most booming sector. We need to put our students into such kind of certifications and all. So you did a great job in terms of the topic, definitely. But we need to work a little harder, because the database is now getting enriched more and more. So you could have done more detailed study on the basis of the secondary data itself.
Yes, ma'am. Actually, investing pattern nowadays, मतलब 10th class के बच्चे भी invest करते हैं. So they should aware
Definitely.
about the investment in ESG, especially for the environment, social, and governance investing.
Definitely, definitely.
Thank you so much,
Yes.
ma'am. So
Thank
over the
you.
next participant is CS Priyanka Mathur, Dr. Sonar Sisodia, and Ms. Neha Bhatia, and their topic is Millennials Shaping and Landscape of ESG Investment. Over to Priyanka, ma'am.
Good afternoon, ma'am. Yeah, good afternoon to all the respected dignitaries. I'm CS Priyanka Mathur, and I'll be presenting my topic, the impact of the millennials' investment decisions on the ESG investments, basically. So kindly allow me to share my screen. Is it visible, ma'am?
Yes.
Okay, let's start. What is ESG? ESG means environmental, social, and governance. These are basically the factors to assess the sustainability of companies and countries. Now let's talk about who are millennials. Talking about the current year, which is 2025, millennials are the people coming within the age group of 21 to 43. Now, why we are considering ESG into decision making? I mean, why we are considering this concept into decision making? Because earlier also the companies were making profits. So let me explain. ESG not only aligns the working in the ethical and sustainable manner, but it also coordinates to improve the risk management, long-term, value creation, or stakeholder engagement, reflecting a more sensible and responsible, impactful investing. Let's talk about the need of the study. The first one is millennial investment preferences. Now, why millennial? The question is why this particular age group have been targeted? Why not Gen Zs? So because the millennials are falling within the age group of 21 to 43, so this is more responsible and I can say more matured age group, which have more awareness about the linkage between the ESG and the investment decision. They are mature enough to take such decisions. And if we would talk about the total percentage contribution in the population size of the millennials, that is around 34% of the total India's population, which is a major proportion talking among few countries. So yes, the number is quite influential to put an impact on the study. Second is the sustainable investment trends. As we all know that sustainability is a booming topic which is going on nowadays. So definitely we need to identify that what investment practices the company need to introduce along with the evolving societal values. Third one is the financial industry implications. And here it is necessary to introduce the investment products and strategies by the company that can cater to the millennial preferences. Fourth one is risk and return dynamics. Analyzing the relationship between the ESG factors and the investment decision helps not only to perceive the risk factors and the return associated with the sustainable investment, but it also helps to provide the investors, a better insight into the financial institutions and their workings. Lastly, the contribution to academics and industry. It is not only adding a detailed and more value addition to the existing body of knowledge, but it is providing additional factors which can act as a driving investment, driving factors which can affect the investment choices of the investor. The objectives are to identify the key ESG factors that significantly influence the millennial investment decisions. Second one is to explore how environmental performance affects the millennial investment choices. Third one is to assess the impact of social impact considerations on millennial investment decisions. Fourth, to examine the influence of governance structure on millennial investment preferences. Fifth is to study the mediating role of two additional factors. One is the financial performance perception, and the other one is risk perception. So here is the conceptual framework that I have developed. The independent variables are environmental performance, social impact, and the governance structure, combinedly known as ESG. The dependent variable of the study is the investment decisions done by the millennial age groups, and the mediating variables are two: financial performance perception and the risk perception. So my hypothesis for this study is environmental performance positively investment decision among millennials. Governance structure again positively influences investment decision among millennials, and the financial performance perception mediates the relationship between ESG factors and investment decisions, whereas risk perception also mediates the relationship between ESG factors and investment decisions. Now let's have a look how these hypotheses will work upon. So the research methodology for my study is descriptive in nature based on both primary as well as secondary data sources. Primary data I have collected using the online survey questionnaire, and I have used the snowball sampling method here because basically we are targeting those investors who are aware about such ESG concept while investment decision making. So we can talk basically about those investors who are more inclined or interested with the sustainable companies like energy companies, or we can say environmental friendly companies, or moving with the products who are making eco-friendly products or something like that. So we need to identify those particular investors. So I have shared the questionnaire with my known people and who further circulated that questionnaire with their known again population. So there were total 100 actively trading investors on the Indian Stock Exchange through which the data was collected. The tools used here was multiple regression analysis, independent sample t-test, ANOVA, partial least squares structure equation modeling. And
And
the
can you come on
population,
the conclusion, please?
yes, I'll just quickly go
Thank
through the analysis. This is the linear regression model, and this was the model that you can fairly see here. Alpha, beta are the alpha is the basically the baseline value at which all the at which the investment decision will be independent irrespective of the values of independent variables. The dependent variable will remain the same, and beta coefficient represents the change in the investment decision due to 1 unit change in the independent value. So we can fairly see that the value of R here is which is the Pearson correlation coefficient, which is 0.676, which shows a strong and positive correlation. It is basically measuring the strength and direction of the linear relationship. R square shows the degree of variation, which is 45.7% in the dependent variable due to the independent variable. Durbin-Watson has been used to measure the autocorrelation, that is measuring the variable's value with its own past value in the at the different time intervals. So here it is 1.736, which shows a possible presence of autocorrelation, which can be avoided in a small sample. So these are the sum of squares, which is showing the total variability in the dependent variable. DF is the degree of freedom, showing the total number of predictors, which are 3. Environmental, social, and governance. Mean square is the division of sum of squares upon DF. And here it is showing the average amount of variability. Now the value of F is significantly high, which shows more significant effect of independent variable on the dependent variable. The p-value, the significant value, is less than 0.000. That shows that the model is statistically significant. In the second table below, we can clearly, I'll skip to the significance table and the tolerance column, basically the last two columns. We can easily see that the EPP and SSI, which is the environmental and social one, the value is 0.92 and 0.014, which is more than the 0.05 level. But however, if we would talk about the governance level, which is 0.009, which is below 0.005. So here we can clearly see that while the environmental and social factor has significant impact, whereas governance structure both have, environmental and social impact do not have significant impact, but the governance structure has the significant impact. Talking about the independent sample t-test, here it has been applied to measure the variation in the two different age groups. Next is the structure
Can you please
equation
come
model.
on the conclusion, because already time is extended.
Yes. The findings of the study have shown that the environmental performance has a significant impact on the investment decision making, which has been accepted. Again, the social impact has also been accepted. However, the governance structure and the mediating impact of the financial performance, they both have failed to be accepted. The reason being, what I mean to understand through this study is we do not have still a uniform and structured governance system in a country talking about the measurement of the ESG levels. by the companies. The companies are coming up with their sustainability reports, but we need to have a more robust framework in order to give a better visibility to the investors. And talking about the financial performance, so yes, still the investors are more inclined towards the profits, and balancing the long-term returns as well as the risk factor. But again, they are more inclined towards the profit factor, due to which the financial performance factor has failed to come up. Risk perception also has been accepted. So this was the conclusion, and these were some major references from my side.
Thank you, ma'am. Namita ma'am, any?
Yes, ma'am.
Professor Priyanka? Okay, Professor Priyanka, you did a good work. I just want to know the number of participants, like the respondents who were there in your question
Ma'am,
set,
there were 123,
like the
but
respondent
after
sample
filtering
size.
out the data, the exact number was 100. Population size
Okay,
was a bit smaller,
ma'am,
what I got to know.
like as and when yes, as and when you'll be increasing, you'll have a different kind of understanding toward the idea. Try
Yes,
and increase the
yes, yes,
database, ma'am, and definitely you'll have a better response and better result, because all three factors could come into your positive phase. Like they can all have a lesser p values. We've seen that it could be a possibility.
yes, yes, ma'am. Thank you
Perfect,
so much.
great work.
Thank you, ma'am. Thank you.
Thank you so much, ma'am. So the
Thank you,
next
sir.
participant is Dr. Sandeep Kumar Malu, Ms. Swati Gupta, Ms. Shreya Malu, and their topic is the effect of work from home policies on banking and investment trends. Your screen is visible. You can start.
Hello. Very good afternoon to one and all present. Okay. So our topic for the paper that we have presented is the effect of work from home policies on banking and investment trends. So these are the different contents that we have included. As we all know that the after the lockdown and COVID-19, the emergence of work from home policies have reshaped the various sectors, including banking investment as well. Now the banking operations and the investment behaviors have changed due to the remote working of the employees into the different sectors. And India, as it is the fastest growing digital economies, it has also witnessed that there are digital banking adoption, there are various fintech innovations, and obviously the investment trends are also evolving. So, uh, due to this, the rates of the adoption, it has led to the higher adoption rates of UPI. Also, mobile banking is used on a larger platform. Internet banking services are also used by the various banks, and as well as the customers are also now emphasizing on using the internet banking only. So, RBI has also emphasized that there should be cybersecurity measures as well, and various literacy programs are also being launched to safeguard the interest of the persons who are using it. Then is the fintech innovations and digital banking boom. India has experienced a exponential growth into the fintech sector also. The digital payment platforms such as you can say the Google Pay, Paytm, Phone Pay, this has also led an increase into the online transactions as compared to the you can say the pre-pandemic levels. The investment trends have also been changed due to the uh, work from home policies. Like for example, the Bombay Stock Exchange and National Stock Exchange have witnessed that the retail investor participation has increased. Now more demat accounts have been opened in last 3 to 4 years. Then is credit risk and lending trends and financial stability. Indian banks and non-banking financial companies also have experienced shift into the credit demand patterns due to the work from home policies. Demand have for you can say for the real estate loans has declined, but there is rise in the home loans and refinancing applications. Regulatory last is the regulatory and policy considerations. SEBI and RBI have introduced various guidelines so that the evolving ecosystem can be regulated, and policies are focusing more on the data protection, cyber security, The best example is that nowadays, whenever you make a call, you will be able to hear that warning which is being launched by the government of India. These are the various review of literature that we have got. The objective of carrying out this research was to analyze the long-term impact of work from home policies on banking and investment trends in India, evaluate the challenges and opportunities that are associated with digital financial inclusion in urban and semi-urban India. Then, thirdly, to investigate the effect of work from home policy on traditional banking models and credit risk assessment. And lastly, to assess the cybersecurity risk and regulatory challenges which are emerging from increasing the digital financial transactions. The study is just a primary study. It's just on a preliminary stage. So that is why right now in this paper we have focused on the secondary data, which we have collected from SEBI, Niti Aayog, and the various other reports. We have gone through it, and this is the data analysis that we have gone through. That there is a shift from remote work post 2020 accelerated due to the digital banking adoptions, and now it has promoted the financial institution to enhance the digital infrastructure and security. There is a rapid increase into the UPI transactions. The data shows that the 10.8 million transactions were done in 2019, which recorded into 2023 has gone to 60.2 billion. So this says that the people are now using the fintech innovations. There is steady rise in the net banking usage also. The net banking transactions have also
Swati ma'am,
grown up.
please, after that, please come on the conclusion. Okay, after this
Okay,
slide.
okay,
Right?
sure, sure. I'll do that. I'll do that. Mobile banking has also increased, and the work from home policies has led to the transition to digital banking, increasing the reliance on the online transaction. These are the findings that financial now the rural and the semi-urban areas also have adopted the digital platforms. The best example that nowadays any vegetable vendor will also have a digital platform, Google Pay, scanner, and all for the payment. Microfinance and credit facilities have also been increased. Actually, the complete banking model has been transferred from traditional banking to the hybrid models. Obviously, this has also led to the rise in the cybersecurity threats and the data privacy concerns. Lastly, we want to conclude that the shift towards the digital banking and financial inclusion has created significant opportunities in rural and semi-urban areas. But yes, they also have raised the various challenges. For example, the cybersecurity risk, regulatory gaps are also there, and the financial frauds and scams which are happening every day, they have also been increased. And the policies, the work from home policies have accelerated the digitalization of the banking sector. A balanced approach has to be used so that the risk can be mitigated and the regulatory reforms can be done so that the inclusive financial ecosystem can be developed in India. These are certain suggestions that we have come across and we want to also make through our study, that the regulatory system have to be enhanced, more regulations have to be made so that the frauds can be looked up. AI and automation and credit risk assessment. It is the world today world is of about artificial intelligence and big data only. So more emphasis has to be given on that so that the biasness can be removed and can be addressed. Cross-border transaction risk. That is whenever you do an international transaction, more regulatory and more safer modes have to be included, and obviously the policy has to be changed, have to be updated so that you can have a safer digital platform and ecosystem. These are the implications toward the society that it is going
Okay,
to work out.
Dr. Swati, you've done a great job. I'll just ask you one very important question. When you
Yes,
are
ma'am.
trying to create a causation between the two aspects, which is the first is work from home and
Hmm.
digitalization, uh,
Yes, ma'am.
because you're saying that it is in the nascent stage, the particular
Hmm.
research of yours. So the most important thing is that you should identify that this causation is not really just the causation or a forced relationship between some two variables. We need to identify that there genuinely a relationship exists. Then only you should move ahead, because
Okay.
normally we as a researcher think about causation to be very real, right? The
Hmm.
relationship between the variable factors, we consider it to be real. But sometimes it might not be that real. And as you've already told, that it is in the nascent stage. So you could look
Hmm.
ahead with that and then you can move ahead, ma'am. or else you
Thank
did a
you.
great job.
Thank you so much, ma'am. Thank you.
Thank you, ma'am. Over the next participant is Ms. Preet Mundada and Mr. Anirudh Kalyani, and their topic is analysis the determinant of exchange rate fluctuation and their impact on international trade.
Good morning, everyone.
Swati, please. Yeah, okay. The screen is visible.
Good morning, everyone. Today, me and my partner Anirudh will going to discuss on the topic analyzing the exchange rate determinants and their impact on the international trade. So, exchange. What does exchange rate in easy words mean? The exchange rate means is the when the two countries with a different currencies exchange their currency, this is said to be as exchange rate. In this discussion, we'll be discussing on the three key determinants, which are inflation rate, interest rate, and GDP, gross domestic profit. Can you scroll ahead? So our objective are to understand the relationship between the determinants and the exchange rate fluctuation and how they affect international trade. With the help of the exports and with the help of the export and import of the business trade uncertainty, we'll be discussing on this topic too. And at last, we're also going to provide guidelines to the government investor about how to manage currency risks. So this is a hypothesis where inflation rate is when that they are relatable, if they have significant or else they don't have significant. So if, for example, let's take about interest rate, the exchange rate are not affected by the changes in the interest rate. And second hypothesis will be the exchange rate are significantly influencing by changes in the interest rate, which we will determine using the statistical methods. Scroll. Yeah. So for this, we have collected data from the World Bank, International Monetary Funds, and OECD. We focused only on the secondary data, and the sample size was from for 14 years, that is from 2010 to 2023. The statistical tools which we use in this data were correlation metrics, time series analysis, and data visualization. And the tools were Python and the libraries like Pandas. This were the problems which we majorly faced was that while collecting the data from 10 to 15 years, there were gaps in some data. For example, let's say there were gaps in fifth or sixth data. Like if the data is showing till fifth, then the next data will show till seventh. So it was difficult for seventh year. So it was difficult to analyze with accuracy. The another factor was there were glitches which were held in analyzing the data, especially in the correlation and the correlation matrix. Then, as we collected data from different sources, so there were slight changes in the values, which affected our accuracy. Then there was difficult to isolate the key factors that influence the GDP, exchange rate, and inflation.
Good afternoon, everyone. So coming to the analysis, interest rate and interest rate patterns are given here. For suppose we have chosen India and China as case studies. Why we have chosen India and China? Because India and China has the major impact on imports and exports, and also does these countries impact to the global trade. So we have chosen our determinants for these two countries and compared them efficiently. So as you can see, interest rate comparisons of India and China are shown here, and the trend patterns are shown among various determinants like interest rate trends. We can see like interest rate for totally high for India for these many years from 2010 to 2023, and China kept the stable interest rate, which affect their international trade policies as well. India, India's interest rate versus exchange rate can be seen here, and China's exchange rate and interest rate would be seen here. Interest rate versus exchange rate can be used to analyze like how interest rate actually affects the overall global exchange and trade between the countries. If suppose the interest rate of the country is slightly higher, there will be almost no change in the exchange rate, and the interest rates will attract customers and investors and global investors from other countries.
So can you come on the conclusion, please?
Yes, sir. 1 minute, sir. So inflation rate will also show the impact on how the inflation is related to direct like money depreciation and currency depreciation. Hand over to Preet.
While we talk about the inflation rate, so this affected their changes in the trade balance. For example, uh, if the inflation was if the currency if you see about if you see China, the inflation rate was quite stable. The other countries try to invest in that in China because it is more stable. The prices won't fluctuate too much. And same as the India, the same as the India, that the inflation rate at the correlation, especially the correlation between the China and the India, China and the exchange rate was minus 6.29, which indicate that it was unexpected and implies that the high inflation was result in the currency depreciation later on. And also in further correlation of India and China, it was positive, which influenced that the rupee depreciate as we go from one period to another. Also, this is influence the trade, international trade, because as the Indian currency decline, the exports become more competitive for the countries like USA, lending to organizations like Apple. So Apple started establishing their operations in India, which lead to less dependency from China. So there are many factors which affected the inflation rate, and also can you scroll it? Show the next slide. This was the GDP data, which we have influence. As there is less time, we won't be able to explain. But Anirudh, can you go ahead?
Yes.
In short.
Yes.
Ma'am,
Sure.
ma'am, is conclusion, ma'am. It's not a complete data analysis need to show. You need to be concluded.
Yes, sir. Yes, sir. Will do. So as we coming to GDP, we can see the graph, and we can say that India's GDP has been fluctuated more than what the China's GDP is, and the correlation matrix here explains that India's and China's GDP patterns are on a various pattern. Coming to the point that when the GDP was low globally, and at the time of 2020, after that there was a surge in GDP as there was ease in all the influence determinants like interest rates and exchange rates. So there was also a kind of slight increase in GDP, as you can see from these charts, and also the correlation matrix. Coming to risk mitigation.
So first risk is to apply on the hedging risk. You can apply for the forward contracts to prevent the fluctuation. Then you can keep track on the currency trends. Whereas you also have to maintain a reverse supply of foreign currency, and also differently, like if you are different currency like US dollars, yuan, and etc. So that's how we conclude that that by analyzing all these factors and giving the risk, giving the assessment, these factors play a major role in fluctuation of exchange rate, which influence the trade balance, growth of the country. Thank you.
Okay, Professor Preet and Professor Anirudh, a very quick question. What was the data period between which, from whom, within which you have collected this research data from? Like when it started and when it ended?
It was
Uh,
started from
from
2010 to
20,
2023.
it was started from
Yeah.
2010 to 23. Yes, ma'am.
Oh, it's a big period. You did a great job, Anirudh and Preet.
Yes, ma'am. Thank you, ma'am.
Thank you so much.
Ma'am, you are not audible. Uh,
Ma'am, can you can please stop your sharing screen, okay, so that the next participant can start
Okay.
sharing. Thank you. So the next participant is the Mr. Sandesh Sendyane and Professor Amol Valero, and their topic is study of challenges and opportunities for payment bank in the Indian banking sector. Mr. Sandesh,
Yes, just give me a moment.
please share your screen.
Uh, is it visible? Just let me know.
Yeah, it's visible. Thank
Yeah.
you.
So good afternoon to one and all. My name is Sandesh, and Professor Amol currently is not available due to some emergency as he has some hospital appointment. So my topic is that the study of challenges and opportunities for payments bank in the Indian banking sector. So payments bank is something. It's a digital bank. It's completely opposite to a traditional bank where they don't have any branches. So all the things are done digitally. So next is we will move towards introduction. Payments banks were introduced by the Reserve Bank of India in 2014. So main goal was to improve financial inclusion by reaching the unbanked population, where the rural market was they have to capture the rural market and they have to make them to a digital platform. So the payments bank can accept a deposit up to rupees 2 lakhs, but cannot offer the credit or loan. So if someone wants to do a deposit of 5 lakh, they will just do it up to a 2 lakh. Then the remaining 3 lakhs will not be deposited. So the major players are Paytm Payments Bank, Airtel Payments Bank, India Post Payments Bank, Pino Payments Bank, Geo, and NSDL Payments Bank. So I was also a part of NSDL Payments Bank as an intern. So next is the statement of the problem. Regulatory limitations are done by the RBI, where the RBI has a rule that the payments bank cannot compete with the traditional banks and cannot provide services with the traditional bank is providing, like providing loan services. The payments bank cannot offer that. So cannot payments bank also cannot offer the credit or loan. Then next is 2 lakh deposit, as we already discussed. So payments bank has a low awareness and trust among the audience, as we just saw the Paytm Payments Bank, which had a case earlier. So many users are unfamiliar with the how they work, the payments bank work. So the preference for traditional banks remains strong. Tech and infrastructure issues are still having the problems because it's not a vast based infrastructure. App glitches are there, server downtime is there because if we use payments bank like Paytm, there is much more glitch at the final time of transaction. Poor network reliability in rural areas. And next is key objectives are to analyze the core challenges faced by the payments bank, to explore opportunities in the digital ecosystem, to assess customer usage patterns, satisfaction, and trust, to recommend strategic solution for growth and sustainability. And next is research methodology. The most of the data was collected through a primary data. I did a structured questionnaire and shared it with the 103 respondents. So most of them were students, professional, entrepreneurs, bankers, and self-employed. The secondary data was through RBI reports. Then next is the key findings are 51.5% of people use payments bank on a daily basis, but that is only for UPI and mobile payment transactions. Then 68% rated 4 or 5 on a scale of 5. only 6% are dissatisfied because they don't use payments bank. They generally use phone pay and Google Pay for their transactions, and which are being connected to traditional banks like SBI and HDFC Bank. So most bank uses the Paytm as 66%. India Post comes on the second number, and then Airtel, Fino, and then Jio. So NSDL Payments Bank has a low reach among the audience. So top challenges faced are technical errors, that like 59%. If you see this, just a moment. So if you see 59% have a technical errors, 42% network issues, poor customer service, and then limited withdrawal options. And lack of trust is due to some of the, like, they do, some payments bank do not follow the guidelines according to the RBI, so they have to face some challenges. So the challenges faced are limited withdrawal options, as we already discussed this. So some of the recommendations are regulatory reforms, all the limited credit, allow limited credit or micro lending in the increased profitability. This will increase the trust and the confidence of the user to invest in this kind of applications and the banks. As payments bank is one kind of application which they are providing to the customer. So improve infrastructure, fix app glitches, enhance server reliability, build trust and awareness. Then partner with the fintech governments like Pradhan Mantri Jan Dhan Yojana, UPI, Aadhaar, BharatNet for better integration. BharatNet is something where government can help the rural market to make themselves presence and do a better transaction with the help of internet in that areas. So also expand offerings through insurance, mutual fund, micro savings, and through types. So in insurance, they can tie with the policy bazaar, then some multiple insurance, general insurance, and health insurance companies to make a good impact and to make a good transaction some of the platform. Then to conclude with this, the payment banks offer a valuable tool for a financial inclusion, but face struggle and operational hurdles. With the right policy reforms, take upgrades, and user awareness, they can scale sustainability. They are especially vital for undeserved areas and digital first users. Thank you.
Thank you. Thank you so much, Sandesh. So,
Ma'am, you are not audible.
okay. Namita ma'am, please ask any question. Namita ma'am, your voice is not audible.
Still not audible, ma'am.
Yes.
Who is next by the time Namita ma'am is joining?
Ma'am, there is
Is
no
there a-
participant.
So all who are present here are done.
Hi, Professor Ankit. Am I audible now?
Yes, ma'am. You are audible.
Perfect. Professor Sandesh, I was just about to ask you a simple question. When we are looking at these payment banks and the sustainability issue of these payment banks, there is a big rag tag issue. The regulatory aspect is very much behind these payments bank, right?
Yes.
So how it is having an impact on the investors? Could
Ma'am,
you just, because if you had a talk with the investors and the customers, could you just talk about how it is genuinely what people are thinking about that currently when they are putting their money into such places?
Ma'am, as an investor, if we talk about a B2B sector, let's talk about a B2B first. They can partner with the payment aggregators and payment gateways like PhonePe, Google Pay, and some kind of other applications which are tied up with the Indian Railways, Make My Trip. These are the platforms they can partner with. So this is one kind of an investment for both the companies. Payments bank is something which is providing their APIs to the businesses. So, and if we talk about the rural, like individual customer in. So the Airtel Payments Bank, India Post Payments Bank has gained a valuable, you know, trust among the audience because those are the players who are quite old in the market. So if we talk about the Paytm Payments Bank, that has created an issue because they were not following the guidelines according to the RBI. The
Yes.
KYC reforms were not being approached because many of the sendings, RBI did some kind of sendings to the Paytm Payments Bank, but they were not, responding to those. So RBI has to take an action in that.
Right, Professor Sandesh. You're moving in a very great direction. This is genuinely going to be a big thing very soon, and though it is very big now, but still there is a possibility of a lot of research onto this particular topic.
Yes.
Great.
Thank you.
Thank you so much, all the participants. Thank you so much, Namita ma'am. So,
Thank you very much,
also,
Professor.
thank you so much.
Thank you.
Uh, if we don't have any more, then Namita ma'am, I just request if we can accommodate few from other tracks because the other tracks are running parallel, and luckily we are done on time. So can we accommodate more?
Professor will be just able to include two more people, two more presentation if it is okay. The
Two
reason
more.
behind, not more than that. The reason behind, I am basically traveling currently and in a
Okay,
ship.
okay, okay.
So I really don't know like till how long the whole thing would continue with the networks. But I am okay with including two more people. Hello. Yes, we can include two more people if I'm audible. Like I mean,
Yes, ma'am, you are audible, but it's just a short notice, so people have to change the track. So just give couple of minutes. By the time the participants who are already here, if you have any questions, if you want to discuss something with Namita ma'am, she is there with us.
definitely,
So
that would
luckily
be
we got some
amazing.
extra time. Yeah, so please.
I would like to tell one thing. When I was looking at the papers and the quality of papers that we are having from Indore, I am currently working in Mumbai since last 2 years. I've been from Ujjain. Been in Ujjain for a very long period of time, so I'm a very close associate to all those who are here from Indore and other places even. But I wish to tell you one thing that the level of research that we are doing is super phenomenal. The level of research that we at Indore Jain and other smaller places we are doing, we just have one big issue that we are facing is we don't have the data sets. If it is possible for the colleges to get in the data sets, that could be a great achievement for us. Like getting an access of Bloomberg, getting access to CMI databases, so that could improve our researches to a very very grand level. Like I was very impressed by Preet, Professor Priyanka Mathur. They are doing like many papers, but still to mention these, they were amazing.
Thank you, ma'am. Thank you.
Right. If you wish to ask any questions, please go ahead. I'll be very happy.
Ma'am, like I want to ask, this topic is actually related to my PhD topic. I'm about to
Perfect.
finish by this year. Thesis submission will be there. So this
Great.
topic was more or less related. I have specifically focused this particular same topic on millennials because the reason I have given, they are more matured enough to understand
Great.
this topic of ESG. So how I could incorporate it more, what workings need to be done at PhD level.
Ma'am, when
This
I
topic.
was looking at your paper, I was really impressed with the way you have done your analysis. You have presented the analysis portion was really very amazing. You're doing a great job. I think I'll just recommend one of the very important, rather than your PhD, I would just ask you to work ahead. When you complete your PhD, move ahead with the secondary database settings, because ESG is now such a big phase where all the investing companies, especially the banks which are putting money into so many different companies, are going to make ESG a mandate, and none of the companies will be having ESG ratings will be allowed to get any finances from anywhere. So I think getting ESG ratings, how those are being done, and evaluating that how these ratings are impacting would be one of the great areas for you to move ahead with the ahead when your PhD is done. So that is one of the great areas. And even one very important aspect when we are talking about the regulatory aspects, we are all talking about regulations. So we can create a simple. You must have heard about reg tax. What
Yes.
these reg tax are doing, they're creating a few guidelines and how those common guidelines could be met with the AI. So creating that
Okay.
regulatory aspect, say for example, putting all the data together. So these regtechs could take data from you because they are definitely searching for researchers who are working on to these ESG sectors. So that could be creating all the guidelines, pushing all the regulatory aspects together would be a great help for them as well. So these are the
Okay.
two areas where you
Thank
can
you
move
so
ahead
much.
very, very swiftly.
Thank you, ma'am. Thank you.
Now we have two student papers which we have accommodated here because the other tracks are running tightly. So Viraj, are you there? Please share your screen.
Are we audible?
Yes, yes.
Okay. So, good afternoon, everyone. My name is Raj Patila. I'm from GSIMR College. I'm here with my co-author, Akansha Yadav. We are both pursuing our MBAs from GSIMR College. We are currently second semester, and this is our first research paper. Our topic is preference of instant noodles. Now, I'll let Akansha explain you about the introduction and objective of our project.
Good afternoon, all. So we have a topic that preference of instant noodles. It's very common and go-to snack for a lot of Indians, especially teenager, college students, and working professionals. And I'm guessing a lot of you must have tried instant noodles. And the objective of our research paper is to study the
Viraj,
consumer taste
your
and
PPT
preference.
is, the slides are not changing. You are fixed on first slide only. Yeah.
Okay, okay. Wait. Is it changing now?
Yes, yes. Carry on. Carry
on. Okay. Okay. So continue.
Second slide.
Yes.
Yes, so I was talking about the objective. So the objective is to study the consumer taste and preference regarding different brands of instant noodles and their reasons for the same, and to understand the consumption patterns of instant noodles in the India. And now I will hand over to Viraj for further informations.
Okay, so this is a literature map, and these are the tools we used in our paper called the curve of correlation, mean, median mode,
again, the
standard
slide
deviation,
is not changing. This slide is not changing. You want me to present your lit map and nothing? Yeah. Yeah.
Okay, is it changing now? Because we are in slide, so right now we are changing from here.
Yes, yes. Okay.
Okay, so okay. So this is our data. Uh, This is our demographic data of our respondents. In total, we have 62 respondents from our survey, in which 52% were males, 45% were females, and 3% were others. Most of our respondents were from the ages between 16 to 25, which is around 70% of our total respondents. This is our raw data. So, and so the convex alpha, so the convex alpha score was 0.71%, which indicates acceptable reliability in our data set. By analyzing the data, we can see around 17 males and 20 females preferred Maggie, around 9 males and 6 females preferred EP, and almost all our respondents preferred veg noodles over non-veg noodles. In total, 59 people preferred veg noodles, I mean. So The correlation coefficient will explain by Akansha.
Yes. So correlation between spice preference and soft drink pairing shows that the correlation and coefficient of 0.22 between spice preference and soft drink pairing indicates a weak positive correlation between the two variables. And it's a weak suggests that while there may be slight tendency for people who prefer spicier noodles to choose soft drinks, the connection is not so strong. And next, the correlation between late night snacking more than one serving that shows the correlation coefficient of 0.55 between late night snacking and eating more than one serving of instant noodles indicates a moderate positive correlation between the two variables. This suggests that late night snackers tend to consume larger portion, possibly due to increased hunger at night or comfort eating habits. Yes. Nextly, we would say about mean, median, mode, and yes, Viraj.
Okay, so the mean for spice preference was 4.14, which means it indicates an on average respondent's flavor spicy noodles showing a general positive but not extremely preference for spice. The median was 4 and the mode was 5, which indicates that most of our common response was 5 highest preference level. And these are the median modes for everything. And for recommendation for the brands, we are going to say that after analyzing the data from the survey, our suggestions to the brands will be
On the first market positioning that promote instant noodles are the ideal late night snacks by offering larger portions of combo packs catering to those who tend to eat more at night due to hunger or cravings.
second is we can introduce dehydrated vegetables, liquid soap bases, seasoning powders, as well as other things to meet consumer preference for toppings, sauces, and spices. As we saw in our raw data, people preferred vegetables, toppings, sauces, and spices in their instant noodles. For global inspiration, we can look at China, Korea, Japan, where they have a huge instant noodle culture where additional ingredients like based eggs, meatballs, pickles make noodle a complete meal, driving market growth. Like in India, instant noodle is still looked as a snack, while in East Asian countries, it's looked as a proper meal. Thank you.
Thank you so much.
Thank you
Great,
so much.
Raj and Fren, and I congratulate Professor Shamin for this because this is an achievement for letting the students on the platform, and it's a challenge we know. So, Professor Shamin, this thumbs up goes to you. Great, great.
This is their first project, so and even they kept my my words and they did it well. Good job, Raj and Akansha. I must appreciate.
Thank you so much, ma'am.
Thank you, ma'am.
So next, the last one is Trapti. Trapti, are you here? You can start.
Ma'am, am I audible?
Yes, you are audible. If you can share your screen. Trapti, is there any problem?
मैम एक्चुअली पीपीटी शेयर नहीं हो पा रही है.
No issues. You can carry on like this. Just state because we are actually short of time as well. State what you have done. Introduce yourself.
Okay. Hello, my name is Trupti Deshpande and I'm pursuing MBA from Govindaram Saxena Institute of Management and Research. So my title of research is an evaluation of employee training and development practices in Charisma organization. So the introduction is this study explored the significance of employee training and development in enhancing job performance, particularly within the material requirement planning process. Training refers to the structured enhancement of knowledge, skills, and attitudes required for effective task evaluation, with development prepares individual for future responsibilities. And the company is Charisma Organization, which is a third-party organization to provide services in another of companies like Kotak Mahindra Bank, Bajaj Finance, etc. The objective of research or the objective of this report is to assess the current training and development practices of practices, identify a gap of area and improvement, recommend strategies for effective employee training in the MRP domain. Okay, so literature review is literature by Armstrong and Phillip support the theoretical framework, reinforcing that training improves both individual competencies and organizational performance. The finding aim to guide HR professions in creating more effective, inclusive, and goal-oriented training strategies, contributing to enhanced productivity and competitive advantage. So I collect the data for Google Form in a Charisma organization's members, and my hypothesis is rejected because the training and development is required for any group, any age people. The conclusion is all the members or peoples require training and development during their starting jobs, careers.
Great, Trapti.
Actually, Dr. Namita, what she did is, Charisma is an organization, so the questionnaire was
Yes, ma'am.
exclusively for them.
I
and-
got it. Yes. Trapti, I just want to ask you a question.
Yes, ma'am.
Are you happy that your hypothesis got rejected?
No.
You should be happy, Trapti. You should be happy. Researchers dance when their hypothesis gets rejected.
Okay. Thank you.
Thank you
Okay,
so
all the
much,
best.
ma'am. It's a
Thank you
pleasure
very
for us to be participate in this conference, and it's really grateful for us to get the advice and the questions and the suggestions from you. It's coming up in this conference. Thank you so much, ma'am.
Thank you, Professor Ankit. Thank you, Shameen ma'am. And thank you to Sangeeta ma'am. She took, Shameen ma'am took all the pains. And Sangeeta ma'am, I'm really congratulating you and your team. You all did a great job. And all the best to all the professors. Great job. Kudos to the team GSIMR. Congratulations.
I must appreciate Ankit sir also, sir. This is the
Yes,
only track which is finishing on time, and that is because you were prompt from the starting.
Yes.
So, sir, I must appreciate, sir. Other tracks are still going on. We have to wind up at 4:30, but we are before time, so it's an achievement. Thank you,
Wow.
sir.
Thank you very much, guys. Thank you very much.
Okay. Signing off here. See you everyone at 4:30. Best paper award will be there, so don't miss that. 4:30 is valedictory. Okay.